Good afternoon, everyone. Welcome to GraceKennedy's Investors Briefing. I am Don Webby, Group Chief Executive Officer. With me, to my left, is Andrew Masado, Group Financial Officer. We welcome all participants who have joined us for this briefing. This briefing has been scheduled to run for 40 minutes. We will use 25 to 30 minutes of this time for presentations and the remaining time to accommodate your questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. That is gkinvestor@gkco.com. You may also call or send a text to our communications team at 876-809-1121. Let me repeat that, 876-809-1121 or 876-809-0464. 876-809-0464. Good afternoon again, everyone. Let me start off by recognizing today as International Women's Day. Greetings. Happy International Women's Day to all the ladies at GraceKennedy in Jamaica and in the world. Somebody asked me earlier in terms of our executive committee, which is the executive leadership team at GraceKennedy. And we have 9 executives on the executive committee, and 5 are women. So when you ask who really runs things at GraceKennedy, Andrew, are the women. Let me recognize them. Grace Burnett, Andrea Coy, Maria McIntosh Robinson, Gail Solomon, and Naomi Holness. Special greetings to the executive leadership team. The 5 women that I mentioned earlier. Big respect. Okay, I have a few slides that I'd like to share with those on the call and our investors who are participating in this investors briefing. You know, I've been doing a number of presentations for the year to investors, to stakeholders, and my first slide, as I think everybody would recognize and understand, is about COVID-19. If you look on the slide there, February 27th was actually the day that the board approved our audited accounts for 2019. And you'd say at that time in Jamaica, we actually had no cases on February 27th. And then moved on to May 26th, which was our last AGM. You recall we had a virtual meeting at that time, and we had 556 cases in Jamaica. And then as we sit here today, you would see that we have now 24,103 cases. And I'm sure everyone on the call is aware that the last 2 to 3 weeks in Jamaica has really been challenging when you look at the positivity rate and the number of positive cases. And at GraceKennedy, we are extremely, extremely concerned about what is happening. So I would say, colleagues, ladies and gentlemen, that in our opinion, it is extremely important that Jamaica rolls out the vaccines as quickly as possible so that we can get to the herd immunity impact, which means 60% of our population will be vaccinated. And I would encourage all my fellow Jamaicans to get vaccinated. I am personally going to be at the top of the line when the vaccines arrive and when it's made available to me. I made a posting yesterday because I felt so strongly about it in terms of what we are seeing that is happening in Jamaica. And I simply said we must remain consistent in our approach to fighting the pandemic, as we have a responsibility We have a responsibility as Jamaicans to our loved ones, our communities, and our businesses, and our country. And I would ask all Jamaicans to really follow the protocols as we speak. Wear your masks, social distance, and wash your hands. It is so, so important. So at GraceKennedy, how did we respond to COVID-19? We were quite proactive. We have a business continuity plan, which was really primarily focused on, obviously, hurricanes and earthquake, but the model really fitted nicely for us in terms of how we manage COVID-19. So the first thing that we did, we formed a global multidiscipline steering committee, and that was headed by Leanne Steele on March 3rd. And the responsibility of that committee was really to track and to follow on how can we mitigate the risk of COVID-19, not only for GraceKennedy and our staff, but for Jamaica on a whole, and the countries that we operate in, USA, Canada, and the UK. The first thing that we agreed as a company is that the safety and well-being of our staff is priority one. Even if that meant sacrificing revenue or profits, our well-being of our staff was priority 111. As we speak, 60% of our office are working from home, and we also provide staff initiatives. Let me say that we have never varied from working from home at GraceKennedy. We have tried our best to facilitate our staff. In fact, 3 weeks ago, I used some stronger language that I'm mandating the staff to work from home unless you have to come to the office. And if you have to come from the office, you need permission from your supervisor to come into office. This thing is very serious, and we must at all times try and mitigate the risk. Our supply chain management, headed by Zach Mars, has done a fantastic job in terms of ensuring that our inventory, our supplies are in place in what has become a difficult world market. Can you imagine, ladies and gentlemen, that freight rates from Southeast Asia has more than doubled and in some cases tripled because of the demand and supply of what is happening worldwide. And that is something that we have to bear in mind in terms of food inflation for 2021 as this pandemic continues. We managed our liquidity, cash management, our margins, cost containment, and cost reduction. And I think this is the one that really helped us, where when we meet, and we meet every week on a Monday morning, the senior leadership team, and while mitigating the risk and managing COVID-19, we also spend time in terms of opportunities. In a crisis, there's an opportunity, and we did come up with some great opportunities, which I'll share with you later in the presentation. And of course, as GraceKennedy #WeCare, we did a lot in terms of giving back to our communities in which we operate in, and I'll also share that with you later in my presentation. So in terms of the financial performance, I mean, the media carried it, the best financial performance in the history of our company. And as you know, this year we are 99 years old, and next year we'll celebrate our 100th birthday. But the year in terms of our financial performance has simply been fantastic. When you look at our growth in revenue, we grew our revenue by 12.3 billion or 12%. You remember a few years ago we had set ourselves a target for 2019 where we wanted to be a 100 billion company. Well, in 2020, we're at 115.4 billion. So we have surpassed that target significantly. And of course, Mr. Masada, we're going to be setting ourselves new targets for our 100th anniversary. But our revenue performance has been good, and I'll highlight a few of the good performances, and Andrew in his presentation will get into more details. Those improved revenue performance translated into a remarkable performance, exceptional performance in our profit before tax, where our profit before tax is up 58.5% or 3.6 billion. So if you look, you'll see the blue chart showing the PBT of 9.7 billion for 2020 compared to 6.1 billion for 2019. In terms of our after-tax performance, we made $6.9 billion. That's 34.5% up, or 1.8 billion. So we are very, very pleased with our performance for 2020. And the market has recognized that. Our stock price year to date is up 42.13%, despite the main index going up by 0.03%. Our stock price has gone up by 42.13%. And I'm really happy to see that the market is realizing and recognizing the true value of the great stock and placing the confidence in the management team and the board of directors to ensure that we continue to show growth for this company. Here are some financial highlights. All business segments within the group recorded increased revenue for 2020 compared to 2019. The food trading, as you would recognize, our international food and our domestic food businesses showed outstanding performances in terms of revenue and profitability. If I was to single out a company that really, really performed well, and I'm so, so pleased, is our business in the USA, which you remember we purchased in 2014, with a clear objective of that company to be the #2 brand, Hispanic and Grace, together in the United States. And I can say to you this afternoon that we are well on our way to meet that objective. And I'll show you a slide later in my presentation where we actually increased our market spend during the pandemic, and that has paid great dividends for that company. Where there's an opportunity, there's a crisis, we actually started to promote and form strategic alliances with online companies and larger retailers. Instacart, who business is growing significantly. Well, the Grace Foods USA sales through Instacart is up 500%. Our sales are up in Walmart, Publix, and ShopRite, and most of the large retailers in the United States. And I'm extremely happy with our food business in the USA. And I want to recognize Andrea Coy and Derek Ricardo, Brian, and all the team for their superb performance, determination in what was a very, very difficult market. Banking and investments, we showed growth in revenue. You'd recognize that the stock market, Andrew, it was down about 20% for 2020. Yes. So as a banking and investment, we held equities. And of course, with the global pandemic in terms of COVID-19, FGB, we increased our loan provisioning, as most banks in Jamaica have done. Insurance performed exceptionally well, delivering double-digit growth in both revenue and PBT. We are very pleased, very, very pleased with the acquisition of Key Insurance. They are performing exceptionally well, recognizing Stephen Whittingham and Tamara, great job. And Canopy, headed by Sean Scott, our health insurance company, is also doing very well. So we are very pleased, and I'll make an announcement at the end of this session in terms of our expansion in insurance. Money services, our remittance business, we continue by far to have the largest market share in Jamaica and in the Caribbean in terms of our remittance business. Let me share a little story with you. So when COVID-19 really peaked as such in the first phase in March, our remittance business was down for Jamaica, inbound about 34%. And we decided that we were going to find an opportunity in this crisis. And what we said is that we're going to really, really promote our digital transactions. And I'm going to show you another slide. But what we are saying is that our digital transactions increased by 400% 2020 over 2019. Okay, so, one of the top stockbrokers in Jamaica said to me that, "Don, you have cracked the code." And I thought about that question a lot. And I went back to basics in terms of GraceKennedy as a group of companies. And I want to say that the results that I've shared with you for 2020 is years of hard work coming together in 2020. And it started off by us as a team and as a board having a mission and vision of being a global consumer group. Then we created strategic drivers. How are we going to ensure that we realize our mission and vision? So we have 4 strategic drivers: sustainable growth and innovation, consumer centricity, internal processes, and a performance-driven culture. A performance-driven culture. And flowing up from those strategic drivers, we want to be a global consumer group, 60% of our profits outside, 60% of our revenue outside of Jamaica, 50% of our profits outside of Jamaica, and we leverage our relationships with our international partners. That is not to say that Jamaica is not growing, but we anticipate, because of the size of the market outside Jamaica, that we will be growing faster than Jamaica. And of course, this is something that we're going to be focusing on and improve ROE to ensure that we maximize shareholders' value. So what I want to share with you is that the financial performance of the group is based on focused execution of our strategic initiatives. And I really, again, colleagues, want to recognize the GraceKennedy team. We have a very good team of dedicated employees, and we are all focused on these initiatives. I want to share what I'd call breaking the code, the 10 key points that came to my mind why we have performed so well in 2020. And I'm going to get into some more details for a few of these. I would say, 1, we invested heavily in technology and infrastructure. 2, as I said before, created a culture in GraceKennedy, a performance-driven culture at all levels. What gets measured gets done. Accountability and execution. And we did fantastic in 2020. We focused on compliance and risk management for our bank and our money services. Some of you will recall at an AGM 2 years ago, I made the comment that compliance is going to be a competitive advantage for GraceKennedy, and GraceKennedy is going to adopt a zero tolerance as it relates to compliance. And I am proud to be sitting here today to say that we have done a fantastic job, and we were recognized by Western Union for that. And Grace Burnett and her team, I really want to recognize you for that effort. And it is, in fact, a competitive advantage why you see our remittance business growing significantly, not only in Jamaica, but in Trinidad, Guyana, and all the other islands that we operate in. Efficiency and productivity, very critical, and an increased focus on margin management, especially in the food division. The story behind this is that we do international benchmarking at Grace. We benchmark ourselves, especially our food division, against other international food companies. And we saw, based on their margin, that we could improve. And 2020 was a very, very successful year for us in terms of improving our margin management. We invested heavily in our brands, and I'm going to share a video with you later in my presentation. Innovation and consumer centricity. As I said to you before, in terms of remittances, we were looking at digital solutions in terms of making digital one of the primary channels in terms of getting to our products and services. Corporate social responsibility, something that is in our DNA at GraceKennedy. We care. We care. Mergers and acquisition, as you have read, I'm sure that I set up a unit, a very focused unit in terms of mergers and acquisition, headed by Mr. Andrew Learaini. And as we say, we're 100 years old, and the reason why we're 100 years old, we have stuck to our core values for the 99 years, and next year 100 years of honesty, integrity, and trust. We care. Those came to my mind in terms of our 10-point plan. So let me look at getting into a little bit more details. Investment in technology and infrastructure. We invested $6 million US in a new warehouse in New Jersey. and you have a picture there. Let me tell you something. That has improved the efficiency, reliability of our business in New York, New Jersey. And it has reduced our distribution cost per case significantly. And that is flowing to the bottom line. And that is one of the reasons why our U.S. business is very, very profitable at this time. We invested US $23.8 million in technology. And we'll tell you we have been investing every year in software to improve our efficiency and our analytical skills. Our HR system, we invested about $5 million, Andrew, in our people in terms of how to manage our people through a software system. And we have been rolling it out through the world, and it's working very well. And we have invested $12 million in manufacturing. And we're going to continue to invest heavily in manufacturing in Jamaica. Our latest plant that we established, Denby, where we are now canning our own Akis, our own Callaloo, and our jerk seasoning. We're doing it now at our Denby plant. But the innovation is coming from our sweet potato, from our frozen line that we have now. And Zach Mars, who is in charge of that thing, has advised me that he has a number of other new products that will come from that frozen line. So I said, Zach, I'd love to see a frozen breadfruit coming from the frozen line. But the sweet potato is on. I think they're in some of the high-low stores. And we're very pleased with our efforts in terms of our manufacturing. And I'll tell you something. Our manufacturing plans for 2020 had the best year ever. Every plant, except for dairy, because we had a rough time with Easter, showed double-digit growth. Here's one of the most important ones, and my team will say to you that, Don, you say this at every chance you get, but I think it deserves saying. One of the things that we do at GraceKennedy every year is an employee engagement score. How motivated, how engaged our staff is. Again, at Grace, we like to benchmark internationally. So the benchmark for engagement, best in class, as you would say, was 65%. Last year, 2019, sorry, it was 66%. When I got the results, I was so elated that our engagement score has gone up from 66% to 71%, the highest in the company's history. And 92% of the companies in GraceKennedy actually surpass the 65%, the benchmark score. And, you know, I thought to myself that here lies the answer of GraceKennedy's financial performance. And this is something that, if we talk about crack the code, I learned this from I started at GraceKennedy in 1995. I started working at GraceKennedy October 5th, 1995. And let me say this. If there's one advice or one suggestion that I can make to those of you listening, that there's a strong correlation between employee engagement and profitability. There's a strong correlation between employee engagement and profitability. And that is one of the reasons, or maybe even the primary reason, why we are reporting today at this investors briefing a 58% increase in PBT and a 12.5 billion increase in revenue. And I want to use this opportunity, colleagues, to really, from the bottom of my heart, sincerely thank every employee in the GraceKennedy Group, from the cashier at Hilo to the gentleman and lady picking at the distribution center, from our remittance business facing the front line, from our bank tellers, and all the frontline workers in GraceKennedy. I'm here to say to you this afternoon at our investors briefing that you are our true heroes of the GraceKennedy Group. And I feel so encouraged at our employee engagement score for the GraceKennedy Group. Big up to every staff at GraceKennedy. Big up. In terms of innovation and consumer centricity, Global Access Plus, and I must confess, colleagues on the call, I may be referred to as being biased, but Global Access Plus is the best online banking I've ever used in my entire life. And I would encourage you, if you are not an FGB customer, sign up to be an FGB customer, and at the same time, sign up for Global Access Plus. It is simply fantastic. It has features such as biometric scans and improved data security. It's really, really good. And let me congratulate Mariam and Ratcliffe and the team, Stacy, everybody for pulling this one together. I think it's a really good product. Digital registration. I want to spend a minute on this one here. So you recall that I said earlier in the presentation that our remittances were 30% down March 2020. And we recognize that we need to change the game in the sense that we need a digital platform to deliver money. Think about it when New York was locked down, which is our biggest market. Who is going to leave their house in the snow with a COVID-19 pandemic outside the door? Well, probably nobody. And what we said is that we need to find a way where our customers can stay at home and send money straight to their bank account or to their loved one's bank account. We have been speaking about, as an executive team and a Western Union, what we call a digital registration, where you can register digitally, stay at your home. You have to fill out a form and go to a location to fill out a form. You do it at home. And then you upload the documents. Colleagues, let me tell you, our team really pulled together. What was taking us so long took us 4 months. So by April 2020, in 4 months, we nailed it in terms of having digital registration. And Grace Burnett will tell you that the number of our consumers, our customers registering is unbelievable and has contributed significantly to the 400% increase in our digital business. And I tell you something, it has continued to grow and it will continue to grow. So I thought that was a big win for us and also contributed to our improved performance. Here are some slides of the Grace brand. And what I would say is that in a time of crisis, people or businesses in the main, and I'm just generalizing, forgive me, tend to pull back on what they refer to as discretionary expenses. In other words, they look at marketing and cut their marketing budget, etc. In a time of crisis, guess what GraceKennedy did? We increased our investment. And we aimed for the sky. So instead of pulling back, we created ads that are now seen on national TV in the United States of America. We are advertising now on NBC and ABC. And that, again, has proven to be a big winner for us. You would not believe how many calls I get from the diaspora, the Jamaicans, saying, boy, Don, I feel so proud. I turn on my TV on ABC and I see GraceKennedy advertising. I feel so proud when I see it, I run to the supermarket and buy up all Grace products in Publix. Let me share an ad with you. And there's something significant about one of them.
Long faces. But Grace patties can make you happy. Yes! In a delicious way. Oh yes, in the delicious Caribbean way. Taste the Caribbean vibe in every bite.
So, colleagues, you realize that what we have done is a fusion of our products with mainstream America mixed with the Jamaican taste, backed by a little bit of reggae music. And I would say to you that our patty revenue and profits is up by over 100%. And if you look at this slide there, you'd see our coconut water. You can drink the coconut water and the patty. And I'm very pleased. And in fact, you would have read or heard that we actually own a 40% shares in the patty company in Florida. and it was actually co-founded or founded by a Chinese Jamaican family in Florida. And we're extremely, Majesty is the name, and we're extremely happy with that investment, and we're extremely happy with how our parties are doing in the mainstream. If you were to guess which one is the number one, well, I should have a poll. We could take the poll, Suzanne. It's actually the spicy beef is actually doing the best, because it have that Caribbean spiciness to it. Here's another
Grown
ad.
in the foothills of Jamaica, shared with the world, made with real love and passion, the gift of flavor that you love. We made real good jerk so you can make something great. Turn up the flavor with Grace Jerk Seasoning. Enjoy real Jamaican jerk.
Again, that is on our on ABC and NBC. And there's also something significant about that jerk ad. Colleagues, the pepper that you see in that jerk sauce is grown in St. Elizabeth in the main, Hounslow. The scallion that you see is grown in Jamaica in St. Elizabeth. And when the pandemic started, we as a company, we bought a significant amount of the scallion and pepper from the farmers so they could get a little working capital to continue their production. That jerk seasoning that you see there is bottled and formulated in Denby, Clarendon in Jamaica. It's authentic Jamaica. From the farmers to the GraceKennedy team processing it both in Hounslow and in Denby. And that is why I'm so proud sitting here today in terms of that ad being now advertised on mainstream TV, prime time in the United States of America. I show this slide, corporate social responsibility, because it's actually the DNA of GraceKennedy. And COVID or no COVID, we invest heavily in our communities through corporate social responsibility. And you have heard me speak about the importance of education to our country. And let me just share with you some of the initiatives that we did for 2020. GK awarded scholarships valued at $21.5 million to 92 university students for 2020-21. We established and grew our food bank at the University of West Indies, UTech and UTech, worth $7.5 million. And this is one, Caroline Mahfoud will tell you, that I'm so passionate about, and all the GraceKennedy team are passionate about. Our university students are sometimes having a hard time feeding themselves. It's challenging out there. And we decided that we are going to help at GraceKennedy. So we have set up a food bank. And I'd encourage anyone on this call to speak to Caroline Mahfoud and see how you can help us to help the students in terms of food packages going forward. We donated food items to all GK communities, including frontline workers and individual experiencing enhanced quarantine. We provided scholarships at all levels, the primary and university levels, to 850 students. And as you heard, I'd set my team a target that 1,000 students must be helped by GraceKennedy, paying their fees by 2022, 1,000. We donated laptops and tablets, 10 million worth of laptops to teachers and students. We also provided food to 100 meals for the police officers working at the quarantine facilities in Cornpeace community in Haines. The point that I'm making, colleagues, that I believe it is the responsibility. This is not a nice to do. I believe it is a must do as corporate Jamaica, that we must give back to our communities and to Jamaica. As the late Honorable Carlton Alexander said, what is good for Jamaica is good for GraceKennedy. And I'm committing here today that we are going to continue and even more aggressively continue in terms of helping the communities in which we operate in. Not only in Jamaica, we have our diaspora Jamaicans overseas, and we're going to Canada, USA, and the UK, and our team we're going to be assisting wherever we operate in terms of business and the Caribbean. So I want to assure you that our activities in terms of CSR activities, we're going to be increasing. And my CFO is beside me, but may I say significantly as we move forward into 2021 and beyond. So I know investors and members of the media and brokers are interested in 2021. And let me say that our headspace is now that we want to ensure that we can continue the momentum of 2020 into 2021 and beyond, especially for our 100th anniversary. We are looking for exciting growth. So the first focus for us in 2021, our digital transformation headed by Stephen Whittingham. We have engaged McKinsey, one of the top consultants in the world in terms of digital transformation, and we have started the progress in terms of establishing our digital factory. Operational efficiency, priority number one. You remember a few years ago, 2018, we spoke about a restructuring, which actually saved the group in terms of operational efficiency, $6 million US, and we need to continue. We need to examine every business that we are in to see how we can become more efficient, because it's getting so competitive. It's getting so competitive. We're going to be, as I said earlier, investing in our manufacturing to effect optimization and modernization. I'm sure you'd have read that we're going to be merging two of our factories, Nalpro and Canning, that is expected to be completed in 2022, and that is going to realize a significant amount of savings, but also innovation of us producing new products through that merged factory. Invest in our brands. I've shown you two ads that we are so proud of. That is going to be a priority one, to invest in our own brands. Margin management. When you are in the trading business, you have to ensure that margin management is the top of your agenda. That could be the difference between making a small profit and giving your shareholders a decent return. Working capital, as we say sometimes, cash is king. When you're in a pandemic and there's a lot of uncertainty, it's extremely important that cash is managed very carefully and you stay on the positive side of cash. Manage your receivables well, manage your inventory well, and that is also going to be key for us. We plan to grow market share in all business segments, remittances, all our food business, our banking, and our insurance. We plan to grow our market share. And of course, as I said before, our employees are our greatest assets. So we need to attract, retain, and develop talent at all levels in the GraceKennedy Group. I spoke about corporate social responsibility and of mergers and acquisition with Leo Riney and his team heading that group. And we believe that mergers and acquisition is going to be a key strategic driver for GraceKennedy to achieve sustainable growth and give our shareholders an even better return on their investment. So colleagues, I'm extremely happy, and this is breaking news, although we're not CNN. And this was signed off today. We have released it to the Jamaica Stock Exchange and to the regulators. And I'm happy to announce this afternoon that GraceKennedy Financial Group has agreed to acquire 100% of Scotia Insurance Eastern Caribbean Limited. The transaction is subject to regulatory approval. Let me say that again. The transaction is subject to regulatory approval. The company is a life insurance company offering creditor life products in 7 countries in the Eastern Caribbean: Anguilla, Antigua, Dominica, Grenada, St. Kitts, St. Lucia, and St. Vincent. And as a cricket-loving man, I can tell you, this acquisition is really, really a great one, where our Caribbean islands, we will be in a position to offer our services in creditor life insurance. So once again, GraceKennedy Financial Group has agreed to acquire 100% of Scotia Insurance Eastern Caribbean Limited. The transaction is subject to regulatory approval. So as we look ahead, my friends, my colleagues, investors, shareholders, as we look ahead to our 100th anniversary and beyond, we remain focused on building and protecting long-term value for all our stakeholders. All our stakeholders. I would like to say thanks. We would like to say thank you to a great board of directors who have guided us, chaired by Professor Gord Shirley, along this journey here. Our employees, I've already bigged them up. You are the true heroes. Our customers and our shareholders for their unwavering support and loyalty as we realize our mission and vision, guided always by our core principles of honesty, integrity, and trust. I'm now going to hand over the mic and the changer to the best accountant in Jamaica, Mr. Andrew Masada, our group CFO. Andrew?
Thank you, Don. Good afternoon, investors and shareholders. I have the pleasure of reporting good results for 2020. As you heard earlier from Don, all our metrics are up. This is really a historic year for GraceKennedy. And we are seeing record-breaking performance in many of our key metrics. So to start off on top would be revenue. As mentioned earlier, our revenue is up by 12%, or $12.3 billion, to $115 billion. Last year we broke the $100 billion mark, and we continue to grow at an even faster rate for 2020. And a big part of this was driven by our food division, where more than half of that growth is coming from the food division, both internationally and domestically. Profit before other income is a good indicator of our operating performance. And we saw this year a really significant growth in that profitability, up 82% to $6.8 billion, an increase of over $3.1 billion. And then profit before tax, for those keeping track, an increase of over 50%, 58.5% increase in profitability before tax. As we approach the $10 billion mark, we're now at $9.7 billion in profit before tax. So really excellent performance on the profit metrics for 2020. In terms of our assets, we see significant growth in our assets. We're now at $171 billion, an increase of $17 billion for 2020, up 11%. The most significant increase is actually in our cash and deposits. So for those who look at the cash flow statement, you'll see that our cash increased from $13.9 billion to $23.3 billion at the end of 2020, an increase of over $9 billion. And this is really an important metric when you're in a situation like a pandemic and you have to remain liquid, your ability to purchase goods, to fund any of your costs. Liquidity is really a key metric, and so we're very happy to see that we're able to convert these profits into cash through growth in assets. And then our equity position also significantly improved, up by 14.5% to $59.9 billion. And coming from this improved liquidity and improved performance, we were able to improve our revenue or dividend payout for 2020. So just to give you a little highlight on the dividends paid out, what we see is that our dividend payout was at an all-time high for 2020, almost $1.6 billion in dividends, $1.586 billion. And this is actually a 57% increase over the 5-year period. So you'll see back in 2016 we paid out just over $1 billion. Now we're almost up to 1.6. Back then we were paying out $1.02 per share in dividend. Now we paid out in 2020 $1.60 So this is really good news for shareholders in terms of return on your investment, not only improvements in the value of the investment, but also cash returns in the form of dividends. So this is the outturn of good profitability and improved liquidity. In terms of our business segments, as was said earlier by Don, in terms of revenue, we saw all our business segments showing improvements in revenue for 2020. In the money services, we saw a 13.3% increase in revenue. Part of this was driven by improvements in our digital transactions. So as mentioned, there was a 400% increase in digital transactions, and we increased the customer base who are doing this direct-to-bank, these direct-to-bank transactions. Also, I think the presentation may have just dropped off for those on the screen. Okay, just going back one to revenue. What we see in the insurance side is significant increase, over 23% increase in our insurance revenue, and this is really the core in insurance. So organic growth was very good for our insurance companies, and also, as we mentioned earlier, we acquired Key Insurance at the end of the first quarter of 2020. So that is showing good returns for us, both in revenue as well as improved performance for Key since the acquisition. And then in banking and investments, modest growth for that segment. What we saw is that during the pandemic, you had a situation where companies were a little bit hesitant in terms of taking on additional loans in this uncertain time. And then on the investment side, companies were also taking a kind of wait-and-see approach to coming to market for corporate funding. So there is growth, but not at the rate that we would have expected without a pandemic in that segment. In terms of the food trading segment, this recorded significant growth in revenue, both locally and internationally. For international foods, all the businesses there showed improvements in revenue, and certainly on the domestic side, our high-low chain of supermarkets saw improvements in revenue, as well as our distribution companies showing improved revenue as well. And in particular, for the international side of the business, where we saw big growth was in the USA, and we saw good growth in Canada and UK as well. And this is, as mentioned earlier, a part of our strategy to grow revenue outside of Jamaica, to achieve at least 60% of our revenue outside of Jamaica in the future. So we see that paying off now with the growth internationally. On the profit side, we are seeing 3 of our segments showing double-digit growth in profitability for 2020. In the case of money services, up 27%. This is really coming from the revenue line, flowing to the bottom line. And in particular, the major companies there showing growth in money services would be in Jamaica as well as Guyana. Really showed strong growth in those markets, in particular for money services. On the insurance side, the improvements in the core operating, in the core insurance business, also flowing to the bottom line, 21% increase there for profitability, where we saw improvements not only in our traditional insurance businesses, but also for the acquisition of Key, we see improved performance. And for Canopy, our health and group life insurance business, that company showing improvements both in its customer count as well as its performance at the bottom line. In terms of banking, we did see a decline for our banking and investments segment, mainly because we had to make some additional impairment provisions for customers who are vulnerable to the effect of the pandemic and operate in vulnerable industries. So that would have caused some tapering off in the performance there. On the investment side, as mentioned before, the Jamaica Stock Exchange the index overall was down by about 24% for 2020. And so the fair value of our equity investments in the market would have gone down because of that. So we did suffer some fair value losses because of the fall in stock prices for 2020. On the food division, what you will see there is really exceptional growth in profitability. When you look at the results for 2019 at $1.9 billion, going up to $3.88 billion, that's almost a doubling of profits, 96% improvement in profitability for the food division. International continues to do very well, and they really had exceptional growth for this year, in 2020. So all our international food companies showed improved profitability, and in particular, our U.S. operations showed very good growth in their profitability for 2020. Our factories, all our wholly owned factories showed improved performance, and then our dairy industries did get impacted negatively because Easter was curtailed last year as it was just around the pandemic time. That would have caused some curtailment in demand at that point in time. Our high-low supermarkets did better in profitability as well, and our distribution businesses, whereas there may have been some areas that saw declines in sales to the hospitality and tourism market. Generally and overall, we saw improvements in profitability for our distribution business. And one thing I definitely want to highlight is you'll notice in those bars in the chart for 2020 that the size of the food bar is almost the same size now as the size of the bar for money services. For many years, you'd have seen money services being the dominant segment in terms of profitability. Well, for 2020, the food trading division contributed 40% of the profits of the group, and money services contributed 41%. So they're almost equal now in terms of their contribution to profitability for the overall group. And that really speaks to improved diversification of earnings as well as better distribution of profitability. So it balances out the group and we are no longer reliant solely on one division to bring in the majority of profits, but we're now improving our diversification overall of performance. And with that, I want to thank you for your attention to this.
Thank you very, very much, Andrew, for that comprehensive review of our numbers. I've been advised by our administrators of the investor briefings that we now have nearly 250 people on the call or in the briefing. And I would say safely that's we normally have maybe 80 to 90. So I guess the good results is bringing a number of our folks on the call. So thank you so much, all 240 or 250 of you, for taking the time to join us this afternoon so we can share our performance with you. All right, there are a number of questions. Hopefully we can get through all. If not, then we're going to post online the answers. But let's see if we can move through quickly, Andrew. Okay, first one is from David Rose, that popular name, David Rose. David Rose, GK's M&A unit has been hunting quite a bit for deals. That is correct. Could you comment on the new Scotia Caribbean Insurance acquisition, the prior deal number of possible acquisitions in the pipeline? Right, David, I'm not sure when the question came through, but I did present as part of my my presentation that we acquired 100% of Scotia Insurance Eastern Caribbean, subject again to regulatory approval. The primary product offering of the company, or the company's offering, is Creditor Life in 7 countries. And just to give you a flavor of what we'll be offering, we're offering credit protection that is offered regionally. to our customers. So you're looking at credit protection for personal loans, residential mortgages, personal lines of credit, and personal and small business credit cards. So I think that is going to do exceptionally well. David, we have, I think that's public information. We have about 10 deals that we are working on at this time through the M&A unit. They're all at various stages. Some are at a stage where we're having preliminary discussions. Some are at a stage where we're having serious discussions. Some are at a stage that we are at due diligence, looking at the company and stress testing our numbers, mitigating, looking at the risk factors in any acquisition. And some are at a stage that is actually with our lawyers, meaning that it could be close to a deal if we dot our I's and cross our T's. So the pipeline is quite heavy, and I say that it is not in Jamaica alone. It's more in the Caribbean, in the United States, and Canada. Keith Darren, sorry if I mispronounce your name. It is received that GK stock is trading below it, or is perceived. It is believed, sorry. It is believed that, you write like an accountant like myself, it is believed that the GK stock is trading below its real price due to its high cost, which makes it unattractive to investors. Is the board considering a stock split to make more marketable, stimulate demand, and therefore, okay. All right, I got the point. So, yeah, we are gone up by over 40% with good results. Our main focus is to continue to ensure that we perform as we did in 2020 to 2021 and beyond. That is the focus of the group. In fact, I am now in the process of trying to pull together a 2030 vision with some aggressive targets there, some ambitious targets. But what I'd say is that we are always looking at ways in which we can maximize shareholders' value. We have not discussed a stock split at the board at this time, but I'm sure that's something that in our strategic directors session and board meeting, it could be put on the table. But not at this time, Keith. This is a very interesting one. Is the group a player in the COVID-19 travel insurance market? If that is yes, what is the take-up and contribution? I would say, let me just say that Canopy, our health insurance company, we did submit a proposal to the government. I don't think it has gone anywhere in terms of the travel insurance market. I could follow up with Sean Scott, but I have not heard anything that it has actually started yet. Not sure why, but I can check on it for you. But to answer your question, yes, Canopy did submit a proposal to the government. I have not heard that it has started, the insurance market has started. That is subject to correction, and I will check on it. If I'm incorrect, then I will post on the GraceKennedy website the correct answer. But I'm almost sure what I've said is correct. Andrew, this is, let me answer it. This is John Jackson, my good friend John Jackson. I'm going to answer the last question, and then you can answer the first part of his question. Is the growth rate for 2020 expected to continue in 2021? John, I'd say yes. Why we don't issue forecasts anymore. I believe based on our budget, our strategic plans, and of course there's a lot of uncertainty with COVID-19 still, but it is expected that we will continue to show growth for 2021. Andrew, John is asking, why has Grace stopped reporting direct cost and GOP in the final reports as well as in interim results? IFRS.
Let's see. Yes, I mean, in terms of the level of detail, we have not reduced the level of detail in reporting, neither at the interim nor the year end. I think we have, redesigned in terms of the requirements of IFRS what should be reported, but the level of detail remains no less. And certainly in our audited accounts, we have all the details on the types of costs, including cost of sales and our admin expenses. And in fact, we've expanded that section to show a further amount of granularity in terms of our operating expenses. So I'd say the information we're giving is definitely in compliance with the accounting standards and no less detailed information.
Okay, thank you. So it's really the IFRS reformatting.
Yes.
Okay, thanks for that, Andrew. Key Insurance has totally changed in less than a year under your guidance. Thanks for that. Yes, well, I'm the chairman of Key Insurance, but we have a great management team there headed by Tamara, and Stephen Whittingham is the GraceKennedy executive in charge of insurance. So if anybody is to get credit, it's a management team and a team at Key. But remember, when we bought Key, we were very focused again on the strategic drivers for Key. Sustainable growth and innovation, consumer centricity, internal processes to become more efficient, and a performance-driven culture. So we have taken that template from GraceKennedy, and as now a subsidiary of Key, we have placed that template in terms of our guidance of how Key is going to be managed going forward. Heavy emphasis on corporate governance also. What is the outlook on Key and the expansion plans? For me, as chairman of the company, I think the outlook for Key is great. You have seen from the fourth quarter results that the company is now profitable. I expect it to continue to be profitable under the guidance of Stephen and Tamara. And the board, we have a very strong, committed, and involved board at Key. Expansion plans. David, I think for this year, you're going to see some very interesting targeted marketing for Key. And you're going to see some new digital products for Key. So for 2021, I would say that's the emphasis in terms of new products and innovation, emphasis on digital, and emphasis on targeting a certain segment of the market. But again, I am extremely happy with the performance of Key, and you'd have seen that the rights issue was a total success when we did it in January. Andrew, this one is for you. Has there been any difficulty in moving funds out of the Eastern Caribbean or foreign subsidiaries? You want to read it and answer?
So I think the answer is we haven't.
Read out the question.
Sorry, so it's really, has there been any difficulty in moving funds out of the Eastern Caribbean or foreign subsidiaries back to Jamaica based on possible central bank restrictions in certain countries? I think it's really centered around whether or not we can get funds out in order to pay dividends. We have not experienced that issue. I think generally central banks have been cautious or very careful in terms of retaining their, making sure that funds are adequate in their countries. But generally, from our perspective, we haven't noticed anything that has impacted us negatively in that area.
Thanks. David Rose again. David, you're supposed to be able to write about 10 articles based on the questions. I love the questions, though. Thanks a lot, David. For food business-led growth for 2020 and even this year, how does GK expect to maintain or expand the reach of the food business in a post-COVID-19 world? Thanks a lot. And that's a question that I've been asked quite a bit. So let me say this, that for GraceKennedy Group, the COVID-19 impact on our food business has been mixed. However, as you have seen, the net impact in our mind, it is positive. Let me tell you why it has been mixed. We actually have in the group in the United States, especially in London and in Jamaica, what I refer to as a large food service business. In other words, we sell to a lot of hotels and a lot of restaurants. You would realize that in those markets that I mentioned, the hotels and restaurants are basically closed. So our revenues in that food service segment was significantly down. But what we did in terms of the traditional business now is that we actually sharpened our pencils and ensured that we can meet the demand of our food business. So let me say this. So people that didn't go to the restaurant or to the hotels, they're actually eating at home. So our business through that segment would have gone up. But what we have done is to ensure that they continue to enjoy the Grace products and Grace-owned products at home. So you'd have seen online and the ads that I showed earlier, that we are actually advertising Grace recipes. So how can our diaspora or even non-Jamaicans or non-Caribbean enjoy the taste of Grace? So you would see that in the United States, and our research is showing that we have an oxtail sauce. And the oxtail sauce is being consumed by non-Caribbean, non-Jamaicans in the main. So one of the things that in a time of a crisis and there's an opportunity, we need to build our brand to ensure that it can not only be consumed and enjoyed by the Caribbean diaspora, but by the mainstream. And I would say, based on IRI data that I have seen, we have been very successful in that area. And I expect that the food business in our main markets, Jamaica, USA, Canada, and the UK, will continue to grow, David. Revenues, Romano. Andrew, why don't you take this one? Revenues grew by 12.28% in comparison to expenses that grew by 9.35%. And asking about the ratio.
Okay, so this is saying our revenues grew, yes, 12.28. This is probably in dollars rather than percentage. And then expenses grew 9.35. Is this ratio of a concern to management? Are there steps to improve this ratio for future quarters? So thanks for that question, Romario. So actually, this ratio is going in the right direction. So you want your revenues to grow faster than your expenses because more flows to the bottom line. And you can see it from our results that a 12% increase in revenue with lower expenses has resulted in operating profits growing by 82%. So really, the idea is we want to continue this trend and find ways to further grow the top line in terms of percentage growth and hold the expense side of the equation as much as possible to this lower ratio. So certainly the steps that we're taking is an attempt to further improve this expense to revenue ratio by keeping the expenses as low as possible while growing the top line.
Thanks, Andrew. How am I doing for time? Oh, okay, because I have a few more questions. I'd love to cover them if possible. Okay. Even though digital transformation strategy recently begun, have you seen any improvement in efficiency? Great question. Also, how do you envision digital transformation improving the top line? So, why I say it's a great question, Romano, is that people think of digital transformation as apps and delivering your product or services through some online method. But if you look at the model that we will be adopting, is going to improve the efficiency of GraceKennedy significantly. And we are going through that exercise line by line with McKinsey and the Digital Factory team and the business unit heads to see how we can extract value and improve the business processes having digitized the platform. So that is to come. I have not factored it in any of my numbers in terms of efficiency, but it's a good question. How is it going to affect the top line? I gave you 2 examples already, Romano. First one, our digital remittances are up 400%. Our sales through Instacart in the USA is up 500%. And I have another breaking announcement. We are now in the final stages of putting high-low, our supermarkets in Jamaica, on an e-commerce platform. And we expect to roll that out before our AGM in May of this year. So we have a number of exciting projects at GraceKennedy in terms of digital transformation. And we have a number of products in the sandbox, as they would say at the BOJ, which is going to be, hopefully be rolled out shortly. Last year it was, well, I answered this questionnaire. It's about acquisition again from a different person, so I don't need to go through that. Senator Webby made mention of compliance being a massive competitive edge for GKMS going forward. Would you care to elaborate on that comment? Is this related to the de-risking situation in the Caribbean? Yeah, so listen, the truth is that Western Union, our shareholder and strategic partner, has ensured that compliance has to be in place at all times, zero tolerance, right? So this issue of de-risking, of course, and all the audits of fraud and that kind of thing. I said to my team that I don't want any fraudulent transaction, not even close, I don't even want to hear that it could be a fraudulent transaction on our network. So yes, it is a competitive advantage, David, and we will continue to work with Western Union and our compliance team to ensure that it remains a competitive advantage, and I feel very strongly about it. Now that we have gotten the compliance right, there's no time for any sort of a relaxation. We now need to focus on continuing to strengthen the compliance, but also to grow our business in terms of market share. Would GK consider stock buyback? Not, Andrew, not at this time. I don't think at this time we will be looking at a stock buyback. But as I said before, my general comment for whether it is a stock split or a stock buyback, as a matter of process, as an executive team and by extension our board, we're always looking at ways to see how we can maximize our shareholders' value. So Andrew and I will have a discussion. We'll do some numbers in terms of stock buyback. Does it make sense or not? If it makes sense, then we'll take it to the board. So we're always looking at all the options, David, to see if it makes sense. What digital solution can we expect from the digital factory, Justin? Justin, we're working on a number of them, a stored value card and a couple others. I wouldn't want to give my competitors too much information at this time, but it's going to be very exciting. What we did, Justin, we're going to focus on the financial services division in terms of priority for 2021. As I said to you, Key Insurance is gearing up. GKGI, that's a KPI for the team there, and the bank is going to be rolling out a number of products in conjunction with our Western Union business. Sorry, I got a whole lot of other questions. Let me just try and read them quickly. Al Edwards from, would you establish high-low stores in the UK, US, Canada, given your growth with the food business and anything there? Al, you know, there's something that's we debate all the time, whether we should get into retail outside of Jamaica. And based on our due diligence, Al, this is going to be very hard for us to compete with the Walmarts, the Tesco's, which you know very well, or the Morrisons, Sainsbury, or Loblaws in Canada. So for the short term, we will supply them with the Grace products, but I don't think at this time it's something that we'll get into outside of Jamaica. But good question. We discuss it a lot. We just do some amount of research and due diligence, but not at this time. Michael Edwards, what are your plans to make FGB a powerhouse bank in the region, the same way GK Group is? Yeah, that's a great question. So FGB, we believe that a lot of the growth from FGB would come from digital growth. And when you have digital growth and you have and the regulators, the pass the regulatory test. It is actually a smaller bank now could be a competitive advantage because you don't have the baggage, if that's the correct word, of the real estate overheads. So I believe the growth from FGB, if we're going to become a Caribbean powerhouse, will come from a digital platform and a digital expansion. It could also come from FGB looking to acquire a regional bank, and that is something that we discuss or merge from time to time. But it is our plan to ensure that FGB gives the GraceKennedy shareholders a proper return on investment, and the way to do that is to continue to grow our business. As you know, we have an excellent chairman in Peter Moses, former City banker, and he has been guiding me very closely in terms of next steps for the bank. Regarding the recent, this is Kelly Miles, regarding the recent acquisition of Scotia EC operator, what is the cost of the, how it is? So one of the things I'd say to you is that we have a strict confidential agreement with Scotia, and I cannot at this time disclose the cost. And again, I want to stress the point that it is subject to regulatory approval. Jonathan Cook, what is really nice about this thing is we're getting a lot of new names. And thank you so much. This is really great stuff. Jonathan Cook, your numbers were not only driven by core business activities, but also the spike in remittance inflows and the uptick in demand of retailers following the outbreak. Is the performance from GK likely to be sustained? I think I basically answered that question already. I think John Jackson asked it in a slightly succinct way. But yes, we have our plans in place as an executive team. We meet every Monday and basically ask ourselves the question, what do we need to do to ensure that it is sustainable? I've shared with you our 2021 key focus areas. Once we execute on those key focus areas, I have no doubt in my mind that the good performance or the great performance of GraceKennedy for 2020 will continue. I caution you, however, that we are in a period of great uncertainty with COVID-19. I mean, some of us, the optimists, were hoping that it would have been coming to an end now, but the opposite is happening. I mean, yesterday alone, it was 800 cases in Jamaica, so it's obviously not slowing down. So I say that against the background, Jonathan, that there's great uncertainty with COVID-19. I'm hoping and praying that we can get the vaccines in place quickly so we can return to some normal level of economic activities. But all things being equal, I believe that the good performance or the great performance of GraceKennedy will in fact continue to 2021 and beyond. I want you to bear in mind that the point that I made earlier, that the performance of 2021 is not a 2021 initiative. It has been years of investment, hard work, a lot of focus in terms of getting those numbers. A lot of investment, that new warehouse in New Jersey, it's a first world warehouse, $6 million US invested in there. The innovation of our Denby plant with our jerk sauce and canned callaloo and ackee. So this is not a 2020 initiative where you're seeing all of these good results or COVID-19. This is a structured way of us executing and of being very focused on a strategic plan. And the management team and the frontline workers, our heroes, we executed well for 2020. When you have a plan, it's all about execution, and I believe that my team is going to continue to execute well in 2021 and beyond. Jonathan, again, does GK plan to consolidate the Scotia Insurance under the Canopy business or another business? Yeah, no, the Canopy business is a health insurance business. The Scotia business that we acquired is a creditor life business. It's actually two different businesses. But obviously, we'll continue to have discussions with Musson, PB Scott, to see if there's any synergistic values in terms of Canopy and Scotia Insurance. But it's two different offerings of the companies. Come. Wow, how are we doing for time? Oh, good. I love these questions. Keep going. No, David Rose, man. No, man, you're serious, man. Eh? You need a one-on-one discussion with Mr. Masado. All right, David, it's always good to have your questions. One area of digital, which is the scope of delivering more value in the long run. Okay. So if I'm trying to interpret your question, is that yes? So as you know, at GraceKennedy, we've been speaking about cross-selling and synergistic values between our companies in the group. What the digital platform will allow us to do is to ensure that we can seamlessly offer products, whether it's from First Global Bank, insurance, or money services, on a similar platform. So to answer your question with that explanation, David, yes. Philip Burgess, nice. Is the Scotia East Insurance profitable? Yes, sir, it is profitable. I'm not going to use the word very, but it is profitable. And is doing very, very well. All right, that's it? Okay, ladies and gentlemen, thank you so much. Andrew, I must confess, I can't recall investors briefing with so much energy in the meeting and so many questions and so many people attending the meeting. So I want to thank all of you. I guess for us to repeat this, Andrew, we have to repeat the good performance. So that's what we're going to be trying to do. May I say to my colleagues on the call, I beg you, try and stay safe, wear your mask, wash your hands, and social distance as best as possible. I believe that, as I always say, the best is yet to come. Let us just focus through this difficult and challenging period, and we will come out of it. And we're going to come out of it, I can assure you, as a country, as a company, we're going to come out of it stronger together. We care. Thanks a lot, everyone. And if you have any more questions, please send it to GK. That email I gave you a while ago, GK Investor. Let me try and get the right thing. gkinvestor@gkco.com. Please send us any more questions you may have. Also, you can text to our communication team headed by Susan Stanley, 876-809-1121 or 876-809-0464. Thanks a lot, everybody. God bless.